The broadcast is now starting. All attendees are in listen-only mode.
Good evening, everyone. On behalf of HDFC Securities, I welcome you all for this session on weekly and monthly FNO outlook. Since tomorrow is not only a weekly expiry but also a monthly expiry, wherein we will be able to gain a lot of knowledge about this session, that how the expiry would pan out, and how the next month could pan out. Since we have been seeing market has been consolidating in a narrow range. So firstly, let me introduce myself. My name is Tarang Solani. I'm the product manager for derivative, and along with me we have Mr. Devarsh Vakil, who is our deputy research head, who will give us the weekly and monthly FNO outlook on the market. So before starting, we'll brief you about the flow. Post Mr. Devarsh Vakil provide us with the outlook on the market. After that, we will also showcase you some of the important features like margin calculator, and also the rollover spread, since we have been having a monthly expiry. So there is a feature called as you can directly roll over your future position from one single window. So we'll also showcase you that spread order window post the view from Mr. Devash Vakil, and after that we'll take the question and answer session. So without wasting any time, I'll hand over to Mr. Devesh Vakil to brief us about the weekly FNO outlook. Over to you, sir.
Okay, thank you, Tarang. So let's jump straight into the content. What we have seen is that after a brutal fall, markets have seen a rise in open interest at lower level. From lower level, we have seen that the Nifty has come up about 300 points. And similarly, in Bank Nifty, we are seeing about short covering, 2% reduction in the Bank Nifty, while Bank Nifty open interest has risen by about 1%. So, as you know, after the last expiry, 3 sessions, we had a brutal fall. Markets did correct a lot. From now, for the couple of sessions, it is started recovering. So the question is whether this recovery is sustainable or not, or whether we are going to break the earlier lows. Let's try to address that question. So when we look at the positioning from the option market for 29th December tomorrow, so for tomorrow's outlook is that we are not likely to fall much from here. We have a huge open interest at 18,000 put levels, and similarly another positions are at 17,800 levels. So hardly any downside is there from current levels. 18,200 and 300 are the resistance. So we are likely to find resistance near 18,200. Put options 17,800 to 18,000 have been written, and calls between 18,200 and 18,300 for 29th December expiry. What are FIIs up to? So they have bought 525 crore worth of index futures. Their open interest has gone down by 18,900. Their long to short ratio has now started rising. So this is a very important chart. I've been showing you this chart every webinar. So at the end of the December expiry, at the beginning of the December expiry, at the end of the November expiry, we saw that the FIs were 3 times short than the long, and gradually they started reducing their short positions. On 22nd and 23rd, their net short positions actually went down from 8.84 to 0.78, and now we are seeing a gradual recovery. So this was the highest short position, and gradually their short covering is happening. This is a good sign. Now they are covering their shorts, and that's why this ratio is coming up. So looking at this evidence, we think that the 18,100 is the maximum pain level for tomorrow. On that level, Nifty can expire. If tomorrow we see some fall, if market were to go down to something like 17,900, 18,000 level, you should create long position, and indications are there that that is the lowest level it can go. 17,800 should be the stop loss, and we should remain bullish with the 17,800 stop loss, because FIs have covered short. We are seeing quite a less leverage position. If we look at the stock futures open interest, it suggests that the open interest is relatively low. The leverage positions are low, and that's why we don't think that there is much downside from markets from here. And you should create aggressive long for the January expiry once we cross the 18,200 to 18,300 band. Once we cross this, then there could be another 400-500 point rally in the markets. So wait for 18,200 to cross for creating aggressive long position. Around 17,900 you can start creating long with the stop loss of 17,800. Now let's look at the levels for Bank Nifty. So again, we are bullish there, and we indicate that one should remain bullish with the stop loss of 42,000. Put writing are seen between these 42 to 42,500 levels. Maximum pain for tomorrow is at 42,800, so it should expire few hundred points here and there from 42,800. Mostly around 42,800 is the level at which we can expect expiry. So it is near that 42,828. So not much movement is expected in Nifty and Bank Nifty for tomorrow's expiry. At lower level, if it comes down to 42,500 to 42,000, create long with a stop loss of 42. And the immediate resistance is at 43,500. Once that resistance is crossed, we can expect a sharper rally. Now, also the opportunity is there in the FNO side, mid cap and small cap stocks. A lot of stocks have corrected handsomely. We feel that the markets are going to get better days ahead, and that means that this mid cap and small cap in FNO side, you can create long position with the opportunity to create long position in the January with appropriate stop losses. We will also come out with various MTF and derivative positional trades during the month, so you can use them. Otherwise, overall, our view is that the correction was required, and once it is now out, the weekends are out of the market, and markets have become light and markets have become healthy. We are headed to higher levels in the January month. That is our view from the derivatives perspective. That's all from my side. Now I'll hand it over to Tarang to show us the features of our softwares. Over to you, Tarang.
Yeah, thank you, sir, for providing us the view. Now I'll just showcase you a couple of features which will help you to trade in derivatives market. The first features I would like to showcase is the margin calculator. Now, once we create any kind of positions in derivatives, especially option trading strategies, so we need to know how much margin will get blocked if we do any kind of strategies. So we have a margin calculator, and also from that, after calculating a margin, you can directly place the orders so that you don't have to log in and you don't have to add the scripts again. You can directly place the orders from that, which will also save your time. And the second features we'll speak about is the spread order, rollover spread order. So if you want to roll over your future positions, so we have a one click window wherein you can directly roll over your future positions from this series to next series. So first, let us look about the margin calculator. So it is available in our HDFCsecurities.com website. Once you go to HDFCsecurities.com, under products, under derivatives, you will be able to see margin calculator. So in that, if you want to see how much margin is required to do any kind of a strategy, let's just take if you want to do any bull call spread strategy, wherein you want to buy 18,200 call and also sell 18,300 call, then how much margin is required? Let us see. So to add, first add both the leg 18,200 and 300 leg. So first add 18,200 call option, select Nifty, select expiry, whatever you want. I want to do for tomorrow's expiry, so I will select that. Select call, want to buy 18,200 call option, and I'll select the quantity in terms of lots. I can do how much quantity I want to buy and sell, so I can edit here. I want to only go for a one lot, so I will type one over here. Whatever premium it is automatically cached over here, and I'll click on buy and we'll click on add. So this one leg has been initiated. Then I want to sell 18,300 call option also, so I will select 18,300 here. The one quantity, that is one lot I want to do. This price is always there, and I will click on sell and I'll click on add. So once I add both the legs, once I click on submit, I will get this much amount of margin will get blocked if I want to do this strategy, buying 18,200 and then selling 18,300 call. So 18,000 amount of margin is required plus 860 rupees margin. 860 is a premium which you are paying to buy 18,300 call option. So you need to add this. So approximately 18,200 of margin is required to do this strategy. And also, if you do show graph, you will be able to see the payoff graph from this screen. At what level you will be start making profit, and what levels it will be this strategy will be loss making. If you don't understand with the graph, you can click on table and you can check what will be the payoff at a different level. If tomorrow market expires at 18,222, then you will get 460 rupees profit. Suppose 18,322, then you will get 4,000 rupees profit for this strategy. So no need to calculate differently. You can directly see it from here, and it's a very beautiful tool. And you can directly place the order from here itself. Now, if you want to buy 18,200, click on buy, log into your account with your credentials. So whatever the credential is, you need to log in with your account. There will be an OTP which you need to type. So once you click on OTP, there will be a buy screen will automatically populated. You can directly place this order, and it will get whatever price you want limit. You need to select the price, whatever you want to buy at 35. You can directly place this order, and once you confirm, then the order will automatically get executed. So from here only you can directly buy and sell. No need to log in and add to the watch list. From directly you can buy and sell from here. So if you're doing any kind of a strategy, we'll always recommend first to initiate a buy leg and then initiate a sell leg to avail this margin benefit, which is 73,000. So if you initiate first sell leg, then system will take 73,000 as a margin, and then if you initiate buy leg, the system will then release the how much margin extra which it was been blocked. So if you have 73,000, then only you'll be able to do this strategy. But if you first create a buy leg and then create a sell leg, system will automatically understand that this is a hedging strategy, and it will only block 18,000 rupees as a margin. So you need to understand this. Once you initiate any kind of a strategy, first initiate a buy leg in the strategy and then initiate a sell leg to avail a margin benefit. Now we'll take you through one of the important features of rollover spread. How to roll over your positions instantly from current series to the next series, and it's a very interesting tool. So I'll just first log in, and it is available only in the Entrade and Empowered, which is our basic trading portal. So now suppose you have Reliance future with you and you want to roll over your future from this series to the next series. On the traditional way, what you have to do, you were doing is first you go to Reliance Industries December future, square of that, and again take positions in January, the same position in January future. So you need to do it in a two transactions. But with a rollover spread, you can do it in a one single transaction and roll over your future. Now under derivatives, there is a option called a spread order. Click on spread order. Click on underlying as a Reliance. Sorry, you need to select future stock, underlying as Reliance. And here in expiry, you will be asked at what in which month you want to roll over your position from December to Jan, from Jan to Feb. I want to roll over from December to Jan. So here automatically if I am doing buy spread, that means I am rolling over my long position, that is a long rollover is happening. If I select sell spread, if you have a short positions, then automatically your short rollover will be happen. That is the current month it will get bought and the next month it will get sell. But I want to do, suppose I want to do a long rollover, I have long positions in Reliance, so I will do buy spread. That means I will do a long rollover. So Reliance sell, and the December future it will show you as sell, and Reliance Jan month future as a buy. So price difference is 16 rupees 80 paisa. So here you will be able to see to roll over your position from December to Jan. It will take 16 rupees 80 paisa as a premium, that is called as the rollover cost. And once you place this order, and once you click on OK, once the price matches, it will automatically get rolled over from December series to Jan series. And if you also, there is an option if you want to place the bid price at a lower price. Suppose you want to place it whenever it comes to 12 rupees, whenever the rollover cost between December and Jan comes to 12 rupees, it should automatically get rolled over. So you can type 12 over here and place the order, so it will remain pending. Once that 12 rupees difference will come, this order this position will automatically roll over. So it's a very interesting and very useful tool for future traders who wants to roll over their position. In one single click, you can roll over directly from the current series to the next series. So that's it from our end. Now we'll open this forum to question answer session. If anyone has any kind of a question, please write it on the question answer section, which is there on the right hand side of your screen, and we'll try to reply as many questions as possible. So there is one question that I don't find square off option in Pro Terminal app. Request you to demonstrate how to square off existing positions in Mobile App Pro. So there is no as such square off option in Pro Terminal mobile. I didn't understand that. I don't find square off option in Pro Terminal mobile app. Request to demonstrate how to square off existing positions in mobile app. So there is an option wherein you can square off your position. There is not an option where you can square off all. There is no option as of now in the Pro Terminal mobile app. But if you click on the open position, and in the open position there will be an option called as square off. So once you click on the square off, it will directly populate the square off screen. So Mr. Santanu.
Santanu is asking who will. I'm interested in guiding. I'm interested, but who will guide for my answer? So please show them the research section.
Yeah, surely. So this is a research section. So here you will be able to see whatever recommendations our research team provides in terms of fundamental call, technical call. So this is the guidance where you'll be able to get from our research team. So here, if you click on fundamental, all the fundamental related calls will be there. If you click on technical, then all the technical related and also all the options, futures options related recommendations will be you'll be populated over here. So from here you can directly see what all recommendations are there, and that will help you for your day-to-day trading.
Okay, Mr. Gautam Pandit is also asking where to see the research recommendations. So we have already covered that. We won't be able to carry the individual strategy or individual stock specific questions, so we'll not be able to help you. How do you say that there is a more bought or a sold position when every sell is matched by the buy and sell? So Srinivas is asking, Mr. Srinivas is, how do you say that the more buy or sell position has been created? So right now, as you understand, for derivatives, for every buyer there is a seller, for every seller there is a buyer. But when we see open interest going up and when we see price going up, that is considered as a long build-up. So compared to stock market, cash, where there is clear buy or sell, here there are four possibilities. Either new positions are being added into derivatives with price going up, that is usually called the long build-up. When prices are actually going down and open interest is building, that is called short build-up. And both of this are also matched by relevant reduction in position. So if prices are going up but the open interest is going down, it is called the profit booking or long unwinding. And similarly, when prices are going down and we see open interest reduction, that means the shorts are covering their earlier position, and that is called short covering. So Mr. Srinivas, this is the basic understanding of derivatives. So when open interest match with the movement of price, we come to know whether long build-up or a short build-up is happening.
So one more
Chitra,
question is,
yeah.
from Chitra, how much is the strike price difference is preferred to take the call and put option selling for 5th Jan contract in Nifty? So I think he's talking, talking about if we want to sell any options, then what is the safest way to sell options of call and put? Any idea?
So basically, when you want to create a spread position, it depends upon your view, how much bullish or bearish are there in the particular expiry. Usually, the Nifty expiries, the strike prices are 50 points away. So usually we see about 1% movement. So at 18,000 level, 200 strike price is good enough. So 4 strikes above or 4 strike below, you should try. That way you will be able to match the cost of the premium also. But it all depends upon your view. How much volatility do you expect on the day of the expiry where you are trading, and depending upon that you should choose the strike prices.
One more question is how to find support and resistance level using option chain. Mr. Abhishek Gupta is asking, sir.
So let's look at the, let me try to take control of the screen. 1 second. Is my screen visible?
Yes, yes, it is visible.
Okay. So here, this is the option chain for Nifty. Now I want to, Nifty is trading around, let's say Nifty right now exact level is 18,000. 1 second. 18,123. Now let's see. Right now Nifty is at 18,123. So somewhere between 18,100 and 18,200. Now I want to see where is the immediate support for the upcoming expiry. So from current level, I will look at the option chain and look at the maximum put option open interest position. So when I look at that, I come to know that at 18,800 maximum puts have been written, and another level is at 17,800. So this is the first support and this is the second support. This is a strong support. If market were to break this 18,000, then we can say that the market has become weak because all these sellers will be in losses and they will scramble for cover. Similarly, when I look at the options on the call side, I see that the 18,200 is the strike where maximum amount of calls have been written. So that should be considered as the resistance. So when you are looking at any stock or any instrument from current market price, look at the level at which maximum amount of puts have been written. That should be the immediate support, and look at the maximum amount of calls written. That should be the immediate resistance. Those resistances are usually work on usual day, on 80 to 90% of day these levels work. But when there is a news or when there is an extraordinary event, then these levels do not work, and then you can expect sharp volatility once these levels are broken. I hope this answers your question. This is a detailed, all these information is available on the internet and on our website. And there are many tutorials for which we have done YouTube videos also. So you can go to our YouTube channel and look at these videos.
Even you can find this information on our research report, derivative research report. You will be able to see all these graphs, so you can identify where exactly the highest OI is there. One more question is usually Mr. Ashutosh Azad is asking, usually find difficult when placing fresh option order. I have to modify order 2 to 3 times. By that time the momentum is gone. What should I do? So basically, Ashut Azad, firstly, we are very soon coming out with the market order to start off with index options. So once it will come, it will automatically reduce the pain to place the order. And the second thing, if you want to buy at a limit price, always buy a price which is slightly higher than the current market price, so that it becomes easier for you to initiate this position. So this is so once a market order will come, it will automatically help you to basically take this position very quickly. Mr. Ramesh Babu is asking, should rollover be done before this month market expiry? So rollover can be done anytime. So if I'm not mistaken about your question which you're asking, but usually it done just before the market expires. Uh, so the rollover can be done anytime. So one more question: if client does rollover through spread, then is it going to consider single order for brokerage charges? No, it will be a double order, Mr. Yusuf. It will be a double order brokerage charges. I am interested in option trading. Mr. Shantanu Shah is asking, I'm interested in option trading, just I needed guided. So, sir, we come out with various option webinars. So on Monday, on this Monday also, we'll come out with how to trade options. What exactly call option, what are put option. So you can register yourself for this webinar. It will be there into our, you can just visit to our hdfcsecurities.com website. Under that, you will be able to see the webinar link. So once you go to the webinar, you will be able to see what all webinars are there in future. So on this Monday, there is one webinar where you can learn about futures and options. And also on our YouTube channel, there are that is of the HDFC Securities. There are a lot of videos which are been uploaded where you can see and learn about futures and options. So Mr. Tanmay is asking how to invest in Nifty. So Tanmay, if you are a trader, you can trade Nifty through futures and options. And if you are an investor, if you can also buy Nifty Bs. So therein you can just buy the Nifty Bs, which is completely replication of what the Nifty is. And if you are a trader, you can go for a Nifty future and Nifty options to take positions in Nifty. Mr. Sunil Singh asks, can shares from some other demat account be kept as margin? No, Sunil Singh, you have to first transfer these shares to our demat account, and then only you will be able to use it as a margin. Where can you find PCR data, how to analyze and how to read option chain? So, sir, can you give some glance about this? Hello, Devarsh sir. I think is not audible. So I think the PCR data you can see in the ready-made available into our various website, and how to read option chain. So as Devash told, it's basically you need to analyze where exactly the highest OI of call and put are. So based upon that, you'll be able to see where exactly there is a strong support and resistance for the particular stock or index. I think we have covered most of the questions, so we'll just wind up this webinar. I thank you all for joining in for this session. I hope this is quite useful, and tomorrow being the monthly expiry, it will be quite useful for you to trade in options where exactly the view is based upon it. And based upon the various features which we highlighted, I hope it was useful to trade in options in a much more simpler way with HDFC Securities. So thank you again. Thank you all for joining, and have a profitable journey ahead. Thank you.